Okay, we are here for Thursday night's training. It is Thursday, April the 24th. Gotta look at the date, April the 24th, and we're here for our training about Power Hour, our Power Hour strategy, and we're going through our questions and answers. TJ, go ahead, baby.
Thanks, Alyssa. Hey, listen, I got a quick question. It's a baby question, but I just need to know the
Okay,
answer real fast.
okay.
You know the strikes that we pick, like so. For example, on the put, for example, it's 5305, 5300 on the put, right?
Mm-hmm.
We don't want we want the number to be above the lower of the two numbers, and vice versa on the call. What number am I really focusing on? Because there's two numbers, and I don't know which one to focus on.
You focusing on the sale leg, so the one that's closest to the price. You don't want the sale leg is the one you don't want to get breached.
No.
One with the -1 next to it.
Yeah, I see what you're saying. Okay,
That makes
when I
sense?
trade tomorrow, yes, I'll pay attention to what numbers by that -1. Okay, yes,
Yep.
ma'am. Yes,
Uh-huh.
ma'am. Thank
That's
you so
it.
much.
You're welcome.
Mhm.
Yep. Marcia, go ahead.
Had a question. Well, hello first.
Hi.
Had a question about the fees. Someone was talking about the fees, and I decided to look at my fees that Thinkorswim is charging me.
Mm-hmm.
And someone said something about 50 cents per
Mm-hmm.
trade.
Mm-hmm.
My my fee is dollar 14.
So most people, you're paying 50 cents too, sounds like. Most people are paying, when you first start with TD Ameritrade and Schwab, you're paying 65 cents per leg, per contract, you're paying 65 cents. And that's just open and close. There's a few other little things they put on top of that. But then you can reach out to them and ask them if they will reduce your per contract fees, and they will reduce it. Generally, I ask for the reduction. They looked at your account. They act like they really looking hard. It's like they just don't want to say yes too fast. So they look and see basically how much trading you've done basically, and they
Mhm.
reduce it down. I ask them to reduce as much as possible. They reduce it down to 50 cents. I think that's as far as they'll go. And then maybe if after that's been a while now, I probably could call and ask them again and see if they'd reduce it again. But everybody I hear has gotten it reduced to 50 cents. I haven't heard anybody getting it reduced past that at this point. But all you need to do is, I actually did it in the chat. I didn't call. I went into the chat at the top of
Okay.
the page where the little headphones are, and I
Yes, I'm
talked to the
looking at
person
that
and
now.
said, I want to
Hmm.
see about reducing my fees, and the person reduced them to 50 cents. Now the $1.14, I don't know about the rest of this stuff, but they know they have a few little other miscellaneous fees, but I do know it's 65 cents per leg.
Okay.
Mhm.
Okay. So
Yeah.
I'm going to call tomorrow.
Yeah, absolutely. You should.
Okay, thanks.
Yep, yep. Virtual? Virtual.
Yep,
Hey.
sorry. Hey, can we do the PDT hack for XSP?
Yes, absolutely.
What is the max
Yes.
loss for that? Then do the formula.
Well, PDT hack is only $1, right? So
Right.
if you take in, let's share a screen real quick. You take in 15 cent or whatever, let's say however you work it. Let me see if I can get a screen up. You take in 15 cent, you're going to do the max loss, which gives the difference of $1.
Okay.
And then, so let's say you take in 15 cent, right? Max loss there is 85 cent. Not sure why all that stuff popped up in my screen. 85 cent. And then you're going to go from there to decide what do you want to do on the next trade. The highest you can go on the next trade is 99 cent, because remember, this is on the max is $1. You got a one spread. So anything above 85 cent that you put in for that next trade is profits, right? Anything above that is profits.
Okay, excellent. Thank you.
Sure. Now, listen, let's talk about PDT hack. PDT hack is only good for cash settled. Am I showing my screen? Can y'all see that?
Yes.
Yeah.
Okay. For PDT hack, you can only do cash settled things. You could do SPX, you can do XSP. Somebody's writing along with me. You can do RUT. right? I think NDX may be one, but do not do something with shares. And the reason is because when you are like with those trades, one of them is going to be max profit and one of them is going to be max loss. So the max loss trade, if you had shares, if like they say you were doing SPY and you had max loss, they're going to try to assign you the shares. And if your account is super small, then all their, well, I'll say super small. If your account is small enough where you can't handle 100 shares, then you're just gonna have to go through all the rigmarole in the messaging, all the email that says you've been assigned, and people get real nervous when they see those emails. Even though if you don't have the money, it don't really matter because all they're gonna do is just take the money. But the way you save yourself all that trouble is just stick with cash settled equities. That way, when you make money, they give it to you. When you lose money, they take it. That's the way that goes, right? Just cash. So there's a couple of other, but these are the main ones. Cash settled equities is SPX, XSP. Don't go trying this on no IWM is not cash settled. Don't go trying it on Apple and Tesla and none of them other jobbies. No, ma'am, no ham. SPX, XSP. If you want to do other places, you need to do a different strategy, not the PDT hack. You got to do something else. Okay, open and close. Basically, open it, use a day trade, however you want to do it. Oh, somebody did erased it. Guess y'all didn't want to see that. Do it that way. Okay. All righty. Cooley High.
Marlisa,
Yep.
I have a question on the PDT X. What happens if, say, for instance, you put in the PDT Act and it expires, say, for instance, 0 DTE, and expires that day, and it expires in between the strikes.
You asked me that before. What did I tell you the last time you asked me that? I told you when it expires between your strikes, you're going to get something between the maximum amount you took in and zero. So let's say you have a PDT hack and you kept, maybe your profit was $50 and expired between your strikes. Then at the end of the day, whenever it all settles, you're going to receive somewhere between $0 and $50. You won't get the whole 50 and you won't get zero. There won't be a max loss. You've got two trades in there and you locked in $50, but price ended in the middle. Now, just so you know, I mean, sometimes we really get kind of caught up in the what if situations. We've had literally one time in all the time we've ever done PDT hacks where the price ended right between two strikes. Because that's very, very, very rare. So I'm not that I don't want you thinking about these things,
Yeah.
but I don't want you to spend time thinking about these things so much so that we don't make a move, right? But
Right.
somewhere between 0 and 50 is where you would end up with a profit. But you won't end up with, you could end up with nothing, but you won't end up with the max loss because you locked in a profit of $50. But your final at the end of it's all over is going to be somewhere between these two prices.
All right.
Okay.
Thank you.
You're welcome.
Arlissa,
Uh-huh.
hello. May I
Hi.
just add to that? Because I know one thing that was confusing me is the iron condor and thinking about comparing it to the PDT hack.
Yep.
Iron condor / sonar, we want the price to be between those two middle strikes, but with the PDT hack, we do not. Is that correct?
Right. So
Okay.
call credit spread, iron condor is when you got a call credit spread and a put credit spread. And let's say you got 5,500 and you got 5,450, right? You want price to expire. This is two different trades. You want price to expire somewhere in the middle. I agree. That's true. This is an iron condor. When you've got a PDT hack, you've got, let's say 54.50 and you've got 54.45. So you're right in between, you got a 5 spread here. And you don't really want price to expire in the middle of here. Even though if you've got the PDT hack set, you've already locked in a profit. If it does expire somewhere in there, you are going to, keep some of the money. It's not going to be all of it. You're not going lose a whole spread of the 500 either. You're not going to lose anywhere near that. You don't want price. And again, it's very rare that that will happen. But these are two different things. This is an iron
Right.
condor, as you're saying. Thanks for clarifying this. This is an IRON. Yeah, I'm writing faster than the board is keeping up. This is an iron condor, and this is a PDT hack.
Thank you. I just wanted to make that clear because I know that confused me in the beginning, and it took me a few shakes to realize, oh, okay, wait. I want
Yeah.
it here, but I don't want it here. Those are different things.
Two different things are going on there. Okay. All righty. Any more questions?
I'll follow up with that. With the PDT hack, if you don't lock in the loss, but you are, well, is it possible? I should ask this question. If you get one side fill and you aren't able to, well, I guess, is it possible? If you don't lock in the second leg, it's just not,
Just a one-sided trade like we would have
it's
any
just
other day.
one-sided.
Yeah,
Okay.
just a one-sided trade like we would have any other time. Yep, that means you just need it to not expire beyond your sale strikes. Like any other time we had a credit spread.
Okay.
Okay, I see some questions here to make sure I did it to XSP for tomorrow. Yeah, that you have to watch, especially if you're on your phone, you have to watch to make sure that you're making sure that you're at the top of the option chain, because it's easy to pick for that next one to open up. It's weird how that happens. Like, I ain't open you. How did you get open on the next day? Definitely. How do you do that? Yeah, I called, asked for a reduction, 2650. Is she showing her screen? IW. Okay, cool. Are we all good? Any more? Okay, I want to go share here now. There we go.
Miss
Okay.
Alisa,
Yeah.
do you find that the PDT hack works best in the morning because you can get both filled, or like if this afternoon, don't do the PDT hack? What's your opinion on that?
I think it's not really a time-based thing. The PDT hack works best when you've got momentum. So as long as the price is continuing to run in that direction, like today, we had a up day the majority of the day. As long as the price continues in that direction, your PDT hack should feel. So what you need for the PDT hack really is momentum more than you need, time of day, because we can see that sometime in the morning we've seen that like 10 and we've seen between 9:30, 10 o'clock that it's just bounced back and forth until it decided to pick a direction. Well, in those cases, PDT hack is not necessarily going to do you any good, right? You need momentum. You need a trend to be going for the PDT hack. So it's really not necessarily time-based. It's more trend-based. Does that make sense?
Yes, ma'am. Okay, thank you so much.
Yep. So like if we're looking here on this screen, right? So if you were to enter, let's say you entered a call credit spread here, you're going to do a PDT hack. Well, all this goodness going down here would be no problem getting that second trade filled. But let's say you entered, a call credit spread in here. You thought, maybe this is a call credit spread I entered in here, and I wanted to get my PDT hack filled, but it just kind of went down here and just hung around. Well, this is going to have a hard time filling the second side because price is just sitting still. And then after a while, it turned the other way. Now, this would be great though if you were doing a put credit spread first, I mean, so yeah, if you were doing a put credit spread first to go with the trend, let's say you put your put credit spread on here as your first trade and you had the trend going up and then you did your call credit spread second, then this is good environment for that because you got a trend. Same thing here, put credit spread here. You got a trend, good to go on with a call credit spread. But then all this here is just bouncing back and forth. This is not good PDT hack movement because the price is just bouncing. Same thing here, price just going back and forth. This is not good PDT hack motion because it's not doing it. It's going up and down. You need a trend for PDT hack to really feel in a quick way. You need a trend.
So no consolidation.
Right. Consolidation is great for
Actually,
iron condors.
I was just gonna say that. So the consolidations are for the iron condor, and
Yeah.
then I like what you said this time around. The second leg needs to be going in that direction.
Yes. Needs to be going in that
Okay.
direction. So
Okay.
yep. So it's trending. And the thing is, you can't necessarily tell what kind of trend we're on until we're in it, right? So sometimes people put on their first trade. You put your first trade on based on what you see is happening, right? And then you may let time pass to see whether the price does its good work, and then you decide, okay, I'm gonna do a call credit spread, or you put your put credit spread on with the intent or the desire to do a call credit spread, hoping, that the charts and the things are going to work with you. But you put your first trade on with the thought that this first trade might need to ride me all day. And the PDT hack just becomes a bonus. Okay, so you're thinking about my first, like our liberation challenge, your first trade might need to ride you all day. And then you say, well, if I get the chance, I'll put on my PDT hack. Because you put a first trade on with the plan of just PDT hacking it and it doesn't act right the first time, then you can be flustered. So our mind should be that first trade should be one that we believe is going to make it all day. That should be our thoughts, our desires.
Yeah, I messed up yesterday when the opening range didn't fully break out. It
Right.
just
We did.
consolidated.
Yes. Uh-huh. Yep. We did it. Consolidated.
Whereas today it was
Uh-huh.
definitely clearer
Right.
that it was up and
And
it just
yesterday was
kept going.
clear. We just didn't wait. Yesterday it was clear. Once it decided to turn around, it stayed turned around. We just moved. We just were in it too quick. If we had waited till it made the turn and started coming back down, we could have rolled it all the way down the rest of the day because it went down from 53.40 or 53.50. It went down 54.50 the rest of the day. We just were in it too early.
Okay.
Mm-hmm.
Interesting. Because yesterday too, if I recall, it was yesterday or the day before. Like I said, it didn't really break out. And
Yesterday.
you saw conflicting candles, green, red,
Right.
green, red. Whereas
Mhm.
today it was
Very
the
clear.
direction was fully blown in terms of
Yeah.
the trend.
Yeah, very good, very good. Yeah, absolutely. And that's the things, those are the things we're looking at. I want to, as one of the things, and I think I hope you all are feeling me as we go this, I'm not just teaching a strategy. I want to teach us to be traders. I want to teach you to be able to see when is it getting ready to make a turn. I want us to be able to look at the chart and say, I think this is an area of resistance. I want you to look to say, I think we're in a gap. Let's see what happens when it finishes. Are we at support? I want us to be able to look at these things and be able to use the things in the chart to help us make informed decisions. Yes, Magic 8 Ball is great and it has given us a nice edge. It helps us a lot with direction. It helps us to stay in stuff before you get too nervous. It does for me. Like to say, okay, Magic 8 Ball is still it's still saying puts, even though it may be pulling back on the strikes, it's still saying that we're in an uptrend. So then I can say, okay, we're still in an uptrend. I'm comfortable staying in my trades longer. So it's giving an extra edge. But I also know how to look at the chart and say, well, like the other day, we're like this looked like it's nah. And then when we went into the trade, it's like, well, this looked like it's been the reverse. And what did it do? Reverse. So we're putting the pieces together, and that's what I want. I want to really train us to be able to identify these things for ourselves, not just for, I mean, we may trade SPX from now until, but you might decide you're ready to branch off and do other things with your trade in life. And I want to try to train us all along the way, that we're all learning along the way as well. All right. Coolie high. Okay, I got us in. I took us back a day or so. Tasty Trade is expensive as they charge $5 per leg for PDT hack assignment, along with $1 commission per leg, up to 78 fees. I think Tasty Trade has a maximum that they will charge you, because Tasty Trade was designed for people who traded larger volume or larger size, like people who put on more contracts. So they do have a maximum, but they probably do have a fee for those box trades, because that's something that Thinkorswim doesn't have a fee for that, which they're one of the few people who doesn't at this point. But Tasty Trades, I think if you have a maximum number of trades, like they have a max of $10. So if you pass over that fee, then they won't charge you any more than $10 for that set of trades. If you're doing more contracts, that kind of thing. But definitely check anywhere you are or you're trading, make sure that you're checking for the fees. All right. Okay, so I put into our chat this spreadsheet, and if you are on your computer, I want you to go to the SPX spreadsheet. Let me see if I can get it open here. It's called the SPX Power Hour spreadsheet. Let me see if I can get it to open here. Go into it's opening Telegram. I'm gonna bring it to the screen. There's a few things that we look at, and I may not be able to do it in on demand. I might have to go out of on demand, because I need you to be able to see the stuff I'm looking at. I need you to be able to see the things on the option chain that you need in order to do the power hour strategy, okay? First of all, you have this spreadsheet, which is our power hour spreadsheet, and it can go for earlier parts of the day. It's already created. The formulas are already here and locked in, right? What it says you're going to take, let's talk about what's in this, spreadsheet. Average true range. Who doesn't know? If you don't, put a one and say a me or something. Who doesn't know what average true range is and how to find it? The ATR. Who does not know how to find ATR? Okay, I see some ones. Okay, see some ones. Me. All right, ATR, it's called average true range. It's basically the average range of that equity, the price movement of that equity for a period of time, right? When we're in now, I don't know if you can see average true range on Robinhood. I really don't know. But let me go back to the chart. If you're on Thinkorswim or some other broker, you actually should be able to see average true range on like TradingView and those guys too. My glasses keep sliding down. This is being irritating. It's an indicator. Let me go add it to, we're going to go add it to our indicators. I think I may already have it added here. Studies. Edit studies, it may already be here and just not be turned on. Okay, you can go to where the indicators are, and you can type in, I think you can do ATR, see ATR, or you probably can type in average true range. It doesn't like it when you type it all the way in. So ATR, average true range. Okay, I got mine turned on. And when you edit it, you're going to want to go to the one that says simple, because when it first pops up, it's going to put it on Wilders. You don't want Wilders, you want simple. Average true range, and you want it 14. 14 is what automatically pops in. And you want simple. What it's doing is it is going to count back the last 14 periods of whatever time frame you're on, and it's going to give you the average of that 14 periods. It's going to say, okay, over the last, you're on the daily, over the last 14 days, this is how much it has moved, what kind of range it has moved. Top to bottom, range is how far, high to low, it's a range. How far has it moved? If you say, I'm on the hour chart, okay, in the last 14 hours, how much of a range has it moved? If you put it on, minutes, it's over the last 14 minutes, how much has it moved, okay? It shows up on the bottom of the chart. On Thinkorswim, it shows up down here. Y'all see at the bottom, it says ATR. ATR. And I'm on the 15-minute chart. So at any given time, it's giving you the ATR for that period of time. And if you look, you can see, I'm going to circle it so that way you can see it even when when I move away, because it's over in here. Even when I move out of you move out of the space, it moves based on where you put your mouse. But when you're out of the range, out of the window there, let me put this on, make it big, because I think I've made it smaller when I was on my laptop by myself, because it gets too big. ATR, let me go out here. See, it says 11:05. It says the average of the last 14 15-minute candles is 11, right? We use this when we're if we're looking here at the ATR, you're looking here at this spreadsheet. When you're on at 3 o'clock, you're going to look at the 1 hour time frame. If you're at 3:15, you're putting it on the 45-minute chart. 3:30, putting it on. Basically, you're looking at how much time is left in the trading day. That's what you're looking at, how much time is left in the trading day. So if it's 3 o'clock, we're putting this on the hour chart. Let me move this so we can put our circle where this is. Basically says it has moved 45, an average of 45 points in the last 14 hours. This is the average true range it has moved. So we put 45, we would take and put that 45 into our ATR box. Why are you not taking that? It goes right in here. 45. Oh, enable editing. Duh. There we go. As you're going down the day, though, if you depend on where you are in the day, you're setting your time frame on your chart to how much time is left in the day. You want to put the current price. I'm gonna give us an example I'm gonna walk through all this example in our chart, but I want to show what are we putting in here. We're putting the ATR in here. And then after you put the current price and the ATR, the spreadsheet will spit out to you what the math is to tell you what area you would look at for strikes. If you don't have ATR, you may decide, I don't want to use ATR because I don't have that. You can also look at implied volatility. Implied volatility is the plus minus number. I call it the plus minus number. Janae told me I need to call it by its name. Ugh. Janae. There it is over there. The implied volatility, I call it the plus minus number. Y'all know what I meant though. People knew what I meant when I said the plus minus number. Implied volatility is over here in the plus. Now, you can't see this number when you're in, I don't know if you can see it in the sim. I know you cannot see it in on demand.
That's exactly how my screen was today. And that's why I messed up and hit Friday and not today.
Mm-hmm.
So now I gotta pay attention to that.
Yeah. Let's pray that it don't do too much gapping between tonight and tomorrow. But this is an implied volatility number over here. 72, which is where we get that number from, is 72. And we would take that and put that into wherever you are in the day, you would put that into the implied volatility number. Let's say we were at 3 o'clock, we're not, but we would put 72. We're talking about tomorrow now. I'm just telling you this is where that number goes. And then based on the current price that you put in here, it's going to calculate the math as well. It's going to then tell you what is the number to look at. And then it says pick a call credit spread strike, go above the number. For a put credit spread strike, go below this number. So this spreadsheet helps guide you to where you would want to look for your strikes. If you're looking at 3 o'clock, 3:15, 3:30, if you're looking at noon, 1 o'clock, 2 o'clock, this will guide you then as well. Now we using other things at our earlier in the middle of the day, but this spreadsheet will help guide you even then. And maybe you use both. You say, well, let me see, let me see what's what. All right, let's do some examples. We got an average true range, which is on the chart. Again, you can use it from Thinkorswim. You can use average true range on TradingView. You can ask in the chat if you don't have average true range, but you want it, you can say in the chat, anybody have the average true range for SPX right now? Somebody should be able to give you what you're looking for. Okay. Average true range. I usually don't keep it on my chart, but like if you're looking at the daily, it'll say the average daily move of SPX over the last 14 days, it has moved 220 something points a day. That's what that says there. That the average move for SPX over the last 14 days, it has average range has been 226 points. That's top to bottom. Range is high to low. So on average, it has gone from high to low 226 points, which is a lot. Okay, some people can use this to set themselves some strikes for each trading day. I'll go up 220, I'll go down 220, get me some strikes and let the chips fall where they may. There won't be good premiums when you do that, but you can do it that way. Okay. Mr. Back. Mr. Back said my head's getting smaller from all my walking. That's what's happening. I had to buy those things. There's some things you can buy to put on your glasses. I'm back here, Mr. Back, and they keep the glasses from sliding down. I had to buy some. I found them on TikTok Shop. So I bought some, and I have them on almost all my glasses. I haven't put them on here. I need to put them on this pair because this pair keeps sliding down. Then I feel like Mr. Magoo when my glasses down here. That's not what I'm trying to do. And I can't see when they down here either. I'm like. Mr. Mac, I love you. Okay, so let's go to on demand then, and let's see if we can run the process. Okay. I mentioned in the chat though that we can look at okay, Miss Melissa says she has the HR. If you want to run this, if you want the script, you got to teach them how to put the script on, because putting on a script is a whole nother level of effort. I've also said that you can look at any given time, you can look at the trade screen, and you can look on the single leg and look for, we're at 2:30 in the daytime. This is what I got, a 2:30. You can look for a delta of 10 or less. Look at for a delta of 10 or less, and that in many cases can be a good strike for you to use as your sell leg as well. 52.25 here and 53.15 here. If it does nothing but give you a place to start your look, then that's a good thing, right? Because if you're looking to say, well, let me see what do I want to start my investigations. Give you some spot. You go look at 52.25. You might say, okay, that's a little low. What's price doing? Is that far enough away? And is it too far away? Is price coming in my direction? It just gives you some place to start, right? But that to me is a This method, it can be used no matter what platform you're on, because you can look at Robinhood and see delta. You can look at Robinhood and see delta of a strike at any time. So you don't need ATR, you don't need implied volatility. You can see delta at any time, but just know delta is live. So it doesn't stay at 0.9 just because it's at 0.9 when you look. Doesn't mean it stays there. Price action will move it. But so a 9 delta at 10 in the morning is not necessarily going to be a 9 delta at 3 in the afternoon. All right. That's going to depend. 9 delta means this is why delta works. 9 delta means there's a 9% chance that price is going to get down here. And there's a 91% chance it won't. 91% chance of being out of the money, which we want to be out of the money. A 91% chance it won't get here. Over here, it's a 92% chance it won't get here. Those are pretty high odds. Now, when you get higher odds like this, you generally take in lower premiums. Higher odds of success, lower premiums. The Magic 8 Ball puts us generally in the 85 range. That's how those premiums can be so high. Magic 8 Ball pushes right into the 85 area, which would be more like here, depending on the time of day, right? It's going to put you in here. So that's another 10 degrees, a little closer, 10 strikes, 10 points, 15 points closer. That's why the premiums are so nice, because you're getting closer to the fire. All right, let's turn on our Magic 8 Ball. Not Magic 8 Ball, I'm talk about that so much. Let's turn on the on demand. We're at 5270. I'm gonna pause it again. We're at 5271. Okay, so now we're 2:30 is what time we're at, right? 2:30, we're an hour and a half away. 5271 was our price. I'm gonna clear out these, so because when we get ready to do our little thing, we want to start with a fresh spreadsheet. Some of y'all already know how to use this. So current price is 5271. And if we were coming back here to the chart, we've got an hour and a half left. So we're putting our chart on 90 minutes. Let me get us a time frame. We're putting it on 90 minutes. I need 90 minutes. Okay. Okay, did you put me on 90 minutes or 1 minute? Time frame. I want 90 minutes. Put our 90 right there. See if it likes that. There we go. 90 minutes. And we can check our ATR of 90 minutes. Y'all see it? What's our ATR? Can y'all see down there?
53.
53.5. 53.5 is our ATR. We're putting that in here. 53.5. Notice when we put our ATR in there, it automatically added, the spreadsheet automatically added 53.5 to the 5271. It added it to it and put us at 5324.5, and it subtracted it, put us at 5217. This column right here says for the call credit spread strike, go above the add ATR number. So 5324.5, that means we're going to go to the next column here, and we're going to put in 5325 or 5330. Uh-oh. Where are you going? I want to go to the next column. Undo. Yeah, there we go. Ah, la, la. Undo. What are you doing? Escape. Okay. I want to go here. 5325 or 5330. I'm above the number that was here in this yellow box. Call credit spread. Want to go above where the ATR told us we were. And for the PCS strike, we're going to go below that one, which means 52.15 or 52.10. I usually put 2 strikes in there, gives us 2 areas to look at. Okay, I'm pausing here. Who's got a question right here?
Are you just picking the closest numbers to it? Because that's pretty close. The
Right,
50
so I'm picking the number right after the ATR. So the current price is at 52.71. Then it added 53 to that, and then I'm picking the next strike past that. Yes, I'm picking because we're already 53 points away from current price.
Oh, I see. We're still okay. I understood the math. I still wasn't understanding the strike, but
Yeah, we're 53 points away from current price, right? So the 53 ATRs is adding to the current price and say we're 50 points, 53 points away. So I'm picking a strike just above that, or
got
just below when we subtracted it.
that
Okay.
makes sense because your safety net is already the 53.5.
Yes, 53 is your safety. There we go. Yep. Okay. All righty. So that's our ATR. Now we can't look at implied volatility inside of on demand. That it doesn't provide that for us. On demand does not provide you with that implied volatility number, although plus minus number, that's not an option we have to work with here. So we can't use that. Okay. But let's go look now. 53.25. All right, let me write these down so that way when I come back, when I go over to the other screen, and 52.10 or 15, we can go look at the money. So we're looking at 230, which this is 230 we're talking about. We're going back to the screen and let's turn it into a vertical. This is 53.25 and 30. Okay, let's turn it on. What day are we on? The 22nd? Yep, 230. 53.25. And of course, it's not going to be $12 because this is SPX. You see, there's not a whole lot of money, $15 here because you got a nice little safety net. And when you're safe like that, you don't take as much money in potentially. I'm going to go back to and look at the delta to see what would be a strike if we were looking just at delta right now. All right, let's go look at that. If we were looking single, we looked at 53.25 based on the ATR, but if we were just looking at delta on the single, we would be in this area, which would be 53.10. See, the spreadsheet put us at 53.25, but delta would put us at 53.10 or 53.15. So you got multiple things to look at to help you determine which one are you more comfortable with. Vertical, we looked at 53.10. 53.10 puts us in the $40 range. We're going to feel better about $40. Puts us closer to 10%. Because we're talking about an iron condor here that you're going to do both sides. That's why you can get further away because you're not going directional. You're looking at both sides. Okay. Then on the other one, we had what, 42.15, 52.15. 52.15 looks like it's paying about $12, $15. You know, if you pay 15 on each side, you would take in $30, 15 on each side. But let's go look at it from a single standpoint. I like using the delta because it's a quick glance and it doesn't take a whole lot of extra moving parts. I can easily and quickly check a delta at the time I'm looking. And that, again, all I'm looking for there is a place to start my research. I'm looking for a strike that says, okay, I can start looking here to determine, do I like this strike? Is it, according to the chart, is this a good place? Right? 52.30.35 is where the delta would put us. 52.30 or 35. Change that to 52.35. That's going to give us another $35, $40. So with both sides, we would have gotten $45 from the call credit spread side and another $35 or $40 from this side. So now as an iron condor at 230, we've taken in $85. Now this is 230. 230, we kind of still looking at Magic 8 Ball, but I'm walking us through the steps of ways that we can identify strikes later in the day. Once we get to where Magic 8 Ball is not something that we want to, you know, gravitate to immediately. Questions so far? All right, let's move ourselves forward.
All right, yes, I do have a question. I couldn't find my mute button.
Yep.
To make sure I'm clear, the power hour, whatever we're calling this, yeah, power hour spreadsheet is always an iron condor.
It doesn't have to be. You can do it one-sided.
You can do it one-sided.
You
Okay.
can. Yeah, it's set to look at an iron condor, but it doesn't, you can pick just one side. Or, you know, put one side on, let some more time pass, then do the other side. That's an option as well.
Oh, okay, okay. And then my second question is this, I'm not using Schwab, so I'm just want to make sure I know what you all are looking at. So what you're looking at, this on demand, is that your sim? Because like, how are you going back in time like that to see?
On demand is in Schwab. This is a Schwab tool.
Right, but that's not, this isn't live though, but it's just showing you like historical prices.
Yes, it is like a replay that
Okay.
it's a replay feature that is inside of Thinkorswim. Though I can pick on demand and it can go back. I can back test everything that you have in regular live is here. I can go back and enter trades. I can look at everything in real time, quote unquote, but not with live money.
Right. So this is like the back testing, I think I've heard people say or something. Okay, thank you so much.
Yep. It's quite useful. Quite useful. Okay, so I moved us to 3 o'clock. And let's put us on the hour chart, 1 hour. Okay, on the 1 hour chart, we got 1 hour left in the market. Y'all see the ATR down there? ATR is 45. I'm gonna grab this and make it a little smaller so I can put more than one thing on here at a time. There we go. I have to close it one. Okay, so now I'm on the 3 o'clock. We're on the 1 hour chart because there's 1 hour left in the trading day. I'm going to slow this down a little bit. And current price, 52.84. It's going to ask us for the ATR, which is 45. If you got that, implied volatility is also a way. When you have that, if you had Thinkorswim, you put it here and then you can balance these trades, these strikes together to see which ones, you know, because many times they get to be the same ones. 45. So then it gave us some numbers. 53.29 kind of kept us around the same area. We need to go above this one, what, 53.30, which is what we just saw with that one. And then I'm going underneath it, 52.35. So now I'm pausing this, 53.30, 52.35, because I also want to look at the single. I like using the delta because it's a real-time thing, and the ATR is based on the last 14 things, last 14 hours, which is good. But delta to me is very real time. It's very real time. I can see what is delta doing in real time. Hold on, y'all. There we go. Okay, so looking at the delta, We've got 5250 is where our delta would show us, even though 5235 is what ATR gave us. So a little bit of a difference. We'll look at both to see what kind of, what kind of money we gonna make. Looking at the 10 delta, we're at 5320, and looking at it with the chart, it was 5330. Based on our spreadsheet, it was 5330. Let's change this to vertical. Look at the bottom side first. We said what did we say? Now I forgot that fast. 5350. Yeah, we did. 5250 is
Why?
paying. Yep.
Yes, ma'am. Why couldn't we just use the 5 delta? Because it seemed like habitually that the spreadsheet is giving us a 5 delta, whereas you're using a 10.
Okay, where you show me what do you mean the spreadsheet's giving you a 5 delta? Oh, as
The
far as
numbers,
the
yeah.
right. Okay, you could do that. You could just know that if we're doing that, only basic the thing you need to know is that it's just gonna be a little further away, which means the strikes are you're
Yeah,
gonna make a little bit less money. But yes,
right.
yes,
Okay.
that's really the key. 5230.35, we picked that's paying $10 at this time, right? If that's the one that the spreadsheet populated, and 5250 is paying $25. There's your difference, basically, is which one of these are you, most comfortable with? Do you want to leverage the 500 and take in 10? Are you comfortable leveraging the 500 to take in 25? What did we say? 53, 53. 20 was the one we came up with, and 5330 was the other. 5320 paying $27, and 5330, which was the one that the spreadsheet said, is paying 12 to 15.
Hmm.
Okay. What I use this for again is I'm pretty much looking at the end of the day for something that's going to most likely balance a trade I'm already in. So I'm not necessarily taking this as my only trade. I'm taking this as a trade that's going to supplement something I already had going. Maybe I already had put credit spreads going all day today, and now I'm putting on call credit spreads to use the collateral I got out. Like the other day, I did that. I had 7 or 8 put credit spreads. At the end of the day, I put on some call credit spreads and took in $25 a piece because I already had the collateral leveraged. I might as well take in a few more dollars, which since my collateral is already out there. This is what you're looking for that. And the closer you get to expiration, the closer you're going to get to the current price.
Wait, I'm sorry. Can you repeat that?
Which part?
About leveraging your collateral. You say you put on some calls because you had puts on.
Yep. So like the other day, I had we had been trading the other day. I had 7 or 8 put credit spreads already on, but I did not have any call credit spreads. The price had been going up or whatever the other day. I don't know, maybe a couple days, 2 or 3 days ago. So when it got to be like, I think it was 350 or 356, because I already had this collateral being used, then I went and looked for another strike that I could use for call credit spreads. This wasn't going to take any more of my collateral money because I already had this collateral being used.
Oh,
Once I
wow.
added call credit spreads at $25 a piece, right? It didn't take any more collateral from me because this money is already using that collateral. And I made another $200 using the collateral that I already had that was running with this. I wasn't going to turn these off. And I made sure to get something up here on this top side that was above, in a good, safe place. I wasn't trying to risk my good trade with something else, but I wanted to be, above where I knew would be a safe area to make sure I could take in a few more dollars since my collateral was already being used.
But that's only if you put on one side.
Yes,
But if you
that
put
is.
on a I'm sorry, you
Iron
just
conduit.
did a put script. No, that's right. So,
Yeah.
oh man, I can't believe that. What I'm thinking about is the other day when I had my loss, then
Mhm.
I could have had a smaller loss
Yeah.
because I had on the PCS. I could have
Yeah.
went down and once it worked itself out, just put on the CCS
Yep.
to make up on the other side and had a
Yep.
smaller loss. Oh my
Yep.
goodness.
Yep. Yep. Of course, we always think about all those things after the fact. After your brain releases itself from the terror of losing your money, then all the
Well,
stuff, all the ideas come to you.
well, first of all, it wasn't even in there because I had no idea that we could do that. But now I know. Yeah.
Yeah.
Okay.
Yeah.
Okay. Wow.
At any time that you have one side going, like if you have a call credit spread going and the price is going down, like yesterday, price going down, 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 you got call credit spreads. At some point when price stops like here and turns around, then you can put on put credit spreads and use your collateral. Maybe you had call credit spreads up here and the day was just going down, down, down all day. And at some point it stopped and turned around, then you put credit spreads on and use that same money you already got out there anyway and make some more money.
Well, see that, and I'm that's what I was saying from my post that I put in the thread is that that method of thinking, I just rode that train on down and closed my
Yeah.
computer and got mad and walked away. What I should have been thinking on the other side, hey, you can save a couple of dollars on
Yeah.
this thing instead of just letting
Yeah.
it expire
Yeah.
worthless. Hey, go get another couple of dollars, at least
Yeah.
make the impact is not, yeah, I'm not
Yeah.
going to get as much
Right.
as I should get, as I lost, but
Mm-hmm.
yet the loss would have been
The loss
less.
would have been less.
Yeah.
Yeah. Yeah.
Okay. Thank
Mitigating,
you.
basically looking to mitigate. Absolutely.
Yes, ma'am. Thank you very
Mm-hmm.
much.
Always looking to mitigate for sure. And listen, Mr. Matt, I wasn't always in the situation where I had the thoughts to do any other thing because I was for a long time would be just like, I guess there goes my money. And I would just like you close my computer and walk away. And then I started to figure I need to figure out some ways of what I'm gonna do in the meantime or, how else, which is why, you use the other side of your collateral. Sometimes you keep a little bit more money, keep a little gunpowder. So in case I got to, come out shooting, I need to have a little bit more to shoot with. So that way you might put on one or two contracts or whatever earlier, but you keep a little bit holding back. So if that early part starts to go the wrong way, you got something in the clip that you can come out fighting with. So I can make some of my money back. Not that you're revenge trading, you're using wisdom and skill, but if I can break even, I'm trying to at least break even out of this or reduce the loss for sure. Reduce the loss. Okay.
And you can't use the PDT Act with this.
No, you
Mhm.
could. I mean, not really, because you really are in this case, you're late enough in the day and you're expecting the price to expire between these two areas. So no, you're not going with one way. This is you're at 3 something in the afternoon. You're basically um wanting price to expire between two places.
Mhm.
Yeah. Somebody has their hand raised. Who is it?
I think it's me. I saw another one. I was trying to be patient for
That's
them.
all right. Go ahead. Mine, but I'm not sure why my hand is up. Go ahead.
Okay. So back to this collateral piece. Is there
Uh-huh.
a caveat to it? It's just to make sure, like I understand what you're saying, but there's still like 10%
Okay.
I'm not getting.
Okay.
So using the same collateral, so you have the PCS is out there. I understand that. So your $500, your 2,000 collateral, whatever is already out there.
Right.
What makes the broker know to use the same collateral? Are you using the same strikes? Like, what is that? I don't know what to say. What is that variable that says use my same collateral, even though
Okay.
now I'm selling a CCS?
Right. So let's say you got a put credit spread and your strikes are 5,300, 5,305, right? And you put on a call credit spread, right? And you got 5,400, 5,405. If price were to expire, could price expire in both of these places at the same time?
No.
No, the broker knows this. Did they know the price cannot expire here and here? One of these trades is going to be good. No matter which one of them, they don't know which one. You don't know. Well, hopefully you know both of them. You want to be both of them, but one of them, no matter what happens, one of them is going to be good. So the broker says there's no reason for me to lock up both of the sets of collateral when I know one of these trades is going to be successful. One of them isn't, but we don't know which one. But I only need the $500 of collateral. Actually, it's even less than that. So let's say you put on 5,400, 5,405, and you collected $100 of premium up here.
Right, and you do the difference. So then
Right.
it sounds like the variable is the fact that it's opposites. You had puts, now you're doing calls.
Yes.
Okay.
Yes.
But if
That
I
is the
want to get
variable.
more puts, then that's more collateral.
True.
Got it.
Absolutely. There we
Got it.
go. Yeah.
Got it.
If you're gonna do more puts, you got to do more collateral because both of those could be bad.
Bad, right.
Yeah.
Okay.
Because if the price goes and tanks below both of them, both of those trades could be bad.
Right. Okay.
Mhm.
Okay. I got my 10%. Thank you.
Mhm. Yep. Now, if you do, as we're talking about, if you do a call credit spread and a put credit spread, and they're right on top of each other, like that PDT hack, that's why the broker keeps an extra 125, because the broker, even though you write one of those can't be right, this is where Jean's question comes in. It could end in the middle. And if it does, the broker's going to keep a little bit extra collateral money if you do them at the very same strike. They keep an extra 125 of your collateral in that case. They're keeping it as collateral. I'm not sure how it gets used or whatever, but they keep an extra 125 when you do the PDT hack. Now, if your strikes are far enough away, like we are here, they can't be in the same place at once, then but if your strikes are right on top of each other, then that's a whole different collateral conversation. All right.
Thank you.
You're welcome. Okay, so we are now at the 45-minute mark. Let's go back to our trade screen. We're looking at the single. Let's see, do we have any questions in here? Okay, try that link. Oh, that's the script. Okay. Looking at the single and checking out our delta again. 52.40. Notice how we're getting closer and closer to current price with this delta. Delta 10, 52.40, 53.05. 52.40, 53.05. 52.40 paying $25. We're still running up there. Yep, 53.05 is paying another $35. So now if you put on both of these, you get iron condor. You took in 25 on one side and 30 on the other. You now taking in $55 using your $445 of collateral. And we're at 315-ish, 313. You need price to expire between 53.10 and 52.40. Price needs to expire in that window. Again, you can do just one side. You can say, I think price is still pushing in one direction, so let me just do one side, and then I'll pick up the other side closer to the end of day. It doesn't have to be early enough. Now, if Rhonda was on this call, Rhonda was the queen, and probably still is, the queen of doing, 3:30, 3:45. We used to be right there together on our calls at the last 15 minutes of the day and pulling in the chart, seeing where is price not gonna go? Where is price not going? You're watching the chart, you're watching the option chain, you're watching the chart, you're watching the option chain, trying to see where price is not going to go. This is where those, your charting comes in. When you're in closer proximity, to the time. And of course, power hour is where price is moving. You need to be able to see what's happening because there's a lot of volatility happening in power hour. My biggest thing is power hour will push from 3 to 320, then it kind of sits still from 320 to 330 or so, and then somehow at 345 it hops on a horse. It's gonna do at 345, it's gonna do something weird, and you need to see what happens next, right? Let's move us to 330. Getting closer to time. Now, you almost gotta be, I won't say somewhat of a gambler, but you definitely gotta have a stronger constitution to be in power hour setting and starting a trade. We've done it a lot, but woo, it can be hard on the nervous system. But notice we've got some things here we're looking at. If you're checking out this chart, what do we see that's interesting on this chart? Because this is what you're looking at, not just strikes and deltas, but we're looking at some things. It's a 15-minute chart. We probably should change to 5. But we've got a good resistance here. We got a good resistance
Double
here.
top.
Double top. We think going to be probably more down. We're coming right into a moving average. So we're going higher, higher. You got a good little support right here. Prices is tightening up. You're looking at the chart to make sure that you're confirming what you're seeing in those strikes or them tweezers. I think we've talked about tweezers a couple times. Those are both tweezer sets. We also have a engulfing candle right here. Showed us this one was engulfing. Right, brought us right on back down, brought down to a moving average, and the 20 moving average is going to provide support as well. You got to keep so many things in mind. That's why I keep telling my math students, got to remember so many things. Okay, now let's go look at our single delta. We're at 52.40 still. That's where we were earlier. And 52.90. We've gotten closer. 52.90. 52.90 is paying $35. 52.40 paying $32.35, somewhere $30. It ain't gonna be no 2s. SPX plays on 5s. See how it's jumping around though, because price is volatile. Moving ourselves forward. Let's take us to 45. And I'm going to take us to 5 minutes on the chart. Take us to a smaller time frame. If I'm going to get an extra, if I'm going to put that extra side on, I will definitely wait till 350. And those can still be the longest 10 minutes. Can still be a forever 10 minutes. It just come down to that moving average. This is the 50 period. We know it's going to be strong, even on the 5-minute chart. Playing some support. Got a little wicking going on. If you were looking here, what strikes would you like? If you didn't have anything but the chart, what strike would you like? What would you think you'd want to do for strikes? Anybody got any ideas? $52.50. Yeah, $52.50 would be down in here.
53.
53, you'd want to go up here.
Psychological.
Now we only got about
Oh, for the last couple minutes, I see.
yeah, let me see, I thought we were a little closer. We don't have that many minutes, so you can't be but so far away because there will be nothing
No
up
money. You're
in
right. You're right.
If you go too far away for today, it won't be any more. Psychological is definitely a good point, but you can't be but so far if you only got a few minutes left.
What are we on, a 5 minute?
I'm on the 5-minute chart.
52,
See
64.
what strike. If you were just looking at the chart, see, look, y'all see that big old monster candle that bounced off the 50-period moving average?
Look at that. And it was it was a baby green.
345.
It wasn't even full. See, that's why I said 53.
Yeah. True. So you see this is bounced off of here, but this is 345, right when it starts to get foolish. Okay, so we're looking here. We've got some resistance here. We've got some resistance right here. Right at the bottom of that gap. 52.90. Let's see what our delta shows us. Would we want us a put credit spread? 52.50. I think somebody said 52.50.
That's my problem. I'm prone to going up.
Yeah.
Oh,
Yeah, but if the price starts going up, then it can bite you. 52.50 has a delta of 4, so we might have to get a little closer to 52.50. We need to get maybe 52.60 or 52.65. Current prices. Now, what you would have, which you don't have now, you would have this plus minus number over here, which really is helpful. As this is drawing down over here, that's a very helpful number, right? To see what do the market makers believe it's going to do between now. This number is between now and expiration, which is, and at this point will be 13 minutes. This number might be 11. They said, okay, we don't think it's going to move any more than plus or minus 11 between now and the time it expires. That helps a lot. And this number is dynamic. It's changing the whole time. And then we've got a delta over here. Now, another thing that you're looking at, so many things to look at. See how this big number here, you got big volume, big open interest at 5,300, which is what Janae was mentioning before. Get beyond these big numbers. Because there are a bunch of people who are waiting there. You want to be beyond where the people are waiting. So get 53.05. But now we don't know what kind of money's up there. But we'll see, because the price is definitely pushing up there. So let's see. Ooh, change it to vertical. 53.05. $25. Sometimes a good safe 25 is better than a shaky, 5,300 is better than a shaky 50. A good secure 25 that you're comfortable with is better than a shaky 50. Right? 53.05 is paying $30 right now. And I think we had 52.65 on the bottom, paying $35 more. So put those together, you're talking about $60 for your iron condor. Again, you could do just one side at first and then go back to the other side when you're ready. But you see how it's pushing off of here. Now these premiums underneath are drying up. You can almost, at this point, you could almost pick something right here or just below where it took off from. That's 52.60. You can almost pick something just below there or just above this moving average because it took off from here. But you got 11 more minutes. Let's see what it does when it hits into this resistance area. Does it hit it and turn back? And usually if I get close to time like this, I'll switch my time frame again down even lower because I want to start seeing more fine-tuned movements. I'm down to 2 minutes now. Yeah, 5 minutes is too long when you only got 11 minutes left. Oh, it done pushed all the way on through. Where you going? As y'all say, where's SPX going?
I listen.
This was
What and I can't see because I'm on my phone, sorry. In relation to the moving average market mover number, what's the number for where you drew the line at the bottom of the the movement when it starts shooting up? When you said you could go right up close here.
Mm-hmm.
What?
What number is that?
Yeah.
It was around 5260.
Okay.
Mm-hmm. That's those
And then
tweezers.
what's the moving average? Like what's the expected move for the rest?
So that's where you would look for that. You could look over at that, your plus minus number, which we can't see on, we can't see on demand, but this is where you look for that number right over here.
Okay.
Mm-hmm. That's where I look for that plus minus number right over in this corner to go along. That's what you use that. The delta, I use that, the delta to see, and I look at the chart to see what am I thinking? What do I think the price is gonna do? And then what it do, it hopped up here to that resistance area, 5288, and it's falling. This was Tuesday. This is the 22nd, which was a couple days ago, Tuesday. And we saw it do just this at the end of the day. This is 351. Run up, drop back. No, look, as Tanya say, look out below. Look out
But
below.
Tanya would have did a PCS. She would have did a put.
Yeah. And it would would have made sense to do one too. At 5260, you did something underneath here. That was a good, strong rejection.
Is there a range of implied volatility that, like how you have this 11, you're calling it the plus minus number, but like, is this 11 like in a good range? So like how with Delta, we say, 10 or less is safer. So with the implied volatility, is there like a range or something that we would look at and say, oh, this says 15, so let me go look at XYZ?
Nope, because this implied volatility number is real time and it's basically based on whatever is going on at the time. Tanya said she saw it one day, it was infinity, and that was the market maker. But no, it's real, it's a live number. It's a live number, and it's going to it goes as the market is moving and as the time is progressing, it's live, right? So like I'm gonna pause this and I'm gonna turn off on demand real quick so you can see even on the option chain for subsequent days, you got where it's projected to be. This number is in all the, see over here to the right, this is where the number actually is, in real life over here to the right. And it's basically projected like tomorrow, it's saying a plus minus 68. The next day, plus minus 102, plus minus 123, 142. This, and as the day is going on, this number is making its adjustments.
I guess then my question is maybe I just don't know what it is. Then what is it really showing? Like, what is that metric?
It is showing what the people, the broker believes is going to be the potential move plus or minus of this stock by expiration on that day.
Like the price. So like if it says
Yeah.
25, they believe it's going to go minus 25 or plus 25,
It
whatever
can
that
go
number is.
up or down 25 from where it is right now.
Okay, that's what it was. I think I
Mhm.
mixed up some of my definitions.
That's
Okay.
why I call it the plus minus number. So you're taking your 5484 and it's saying, okay, 5484 from this till tomorrow, we can add 68 to that between now and expiration tomorrow, and we can subtract 68 from that. So somewhere between these two numbers is what we expect the move to be.
Got it. Thank you.
And this changes because as time is decaying, new data's coming in. Sometimes it'll be going down, sometimes it'll be going up, depending on the volatility that's happening, right? So this number is changing. It's a real life dynamic number. And as you get closer to expiration or closer to 4 o'clock, the number is drawing down. It draws down sometimes faster than others. You can look at 3 o'clock, it might say 12. You can look on some days at 3 o'clock and it says 25. And then you can get to 3:30, 3:15. Like I looked, might have been today. It was, 3:45 and the number was still saying 11 and 12. And you're like, you got 15 minutes. How you gonna move this much in 15 minutes? But it can. It definitely can. So if you're using that number we use it to look and see if I go up from current price and down from current price, can that help me identify what could potentially be good strikes based on the chart, based on the plus minus number, based on all the things, mainly the chart. If you get into the 3 to 4 o'clock window, you need to lean on that chart. We have to lean on the chart if you're in that window between 3 and 4 o'clock. If you're in power hour, that's going to be your friend. Can you show the spreadsheet again? Yep, I sure will. Creep down to see when the premiums become worth it. Yeah, so now that's a good point. The premiums are going to be, you have to determine what is your worth, right? What is worth it? Because $50 might be worth it. But if that's going to put you closer to the fire and in harm's way, then it's not worth it. Because sometimes that one extra strike, one extra place, is just that one more spot is going to be that extra 5 points is what you need in order to keep you safe. So you going for the next strike to get 5, 10, 15 more dollars could be just the one that breaches you all the way. So you're going for 5 or 10 more dollars, but end up losing 500. So you have to determine what is your worth it. Worth it is can I get my strike and not get breached, then it was worth it. All right. So sometimes I know I would say sometimes like, $15, I don't know if that's really enough. But if all I did was put my collateral out and I took $15 in and all that happened was time passed, then I made $15 literally doing nothing, but letting my collateral sit and time pass. That's still good. That's a good return if all I did was leverage my collateral. $15 feels like it's not a lot of money. Right? But if you didn't do nothing for the $15, somebody walked up to you and said, here's $15, you wouldn't say, no, I don't want that. That ain't enough money. Right? You probably wouldn't. You might, but no, most likely you wouldn't. Here's a 20. You're like, okay, cool. Thank you. Thank you. Somebody else to see the spreadsheet again. Let's go there. Here we go. Here's the spreadsheet. Curtis, what was the question on the spreadsheet?
No, I just wanted to see, right? Like you were filling out for at 2:30 and then 3. I was wondering if you were filling the rest of it in. Like part of me is looking at like the range, right? It was starting to narrow in. So again, I'm just trying to, and again, it went crazy at the end of the day, right? I thought we were looking for, okay, look how far away it is. Okay, next time frame it's a little bit smaller. The next time frame it's a little smaller. And then if it keeps getting smaller and smaller, it's kind of telling you things are calming down and maybe it's okay to go ahead and jump into something. So that's what I was thinking about in the back of my head.
That'll work too. Let me go and get us 45 minutes. Well, we can do a 30-minute time frame.
And no. And I don't need you to put all the enter it all in. I was just, like I said, I think I was following your time frame, or following the use of the spreadsheet. But I think this was a perfect example. It spiked at the end of the day. Like, it doesn't matter what you see, right? There's craziness that happens in the last power hour. There's craziness that happens in the last 5, 10 minutes. You just got to be kind of ready for it.
Right. We already that last 15 minutes, especially when here recently, it's just been bananas, banana. Right? How was I at 52 and now I'm at 54? Oh no, I'm in real life. I was like, what happened? There's no way that it did all that. Let me go back to the on demand. Somebody else had a question. Let me while I'm getting this back to the right place. What other question did we have?
I wanted to go back to using the collateral again.
Okay.
Question. All right.
Yep.
So in the day, you got in the trade that morning, 11 o'clock, good to go. It's going in your favor. Let's say that. So then you're saying, so my thought is now, hey, if we see a if whether the market's going up all morning and it levels off and now it's retracing,
Mm-hmm.
think about doing an iron condor on the other side.
Mm-hmm.
Whatever, if you started with a PCS, now you're going to do a CCS. My
Mm-hmm.
question is, when you do it, how close do you get to the fire when you're already winning? You know, it's going to be
Right.
a good day.
So not
Um,
good, not close at all.
okay, okay then.
Mhm,
All right.
mhm.
But we're
If
not at
I've
the
got a
10
good
deltas.
trade going, I don't want to risk my good trade by putting on something else, quote unquote, being greedy, putting on
Okay,
something else too close that's now going to ruin the good trade that's been going all day.
got
I'm
it.
only putting on the extra one for, a few more dollars since we're here.
Right. I got you. All right. So let's say it's a bad trade.
Okay.
Again, like yesterday.
Uh-huh.
And it is turning. So your bad trade is already gone. It's
Mm-hmm.
already down. It's already done. So
Mm-hmm.
now you're just trying to mitigate your loss.
Mm-hmm.
When you notice a turnaround in the market, how close again? How close then do you get to the fire?
Okay, so now if your first trade is basically shot, you might as well
Yes.
erase that one from your mind and start like you were
Right.
starting fresh.
Okay.
So that
Okay.
at that point, you should be looking, your subsequent trade should be looking at, getting good trades. How do I start basically fresh and get trades that are going to be now good trades? Not necessarily just to mitigate what we lost, but you want good trades. So now you're basically starting all over to say, okay, now I want to put good trades on that are going to take me through the end of the day and be profitable.
Got it. Okay.
Mm-hmm.
Thank you.
Yep. So I went back to the 30-minute field in our spreadsheet. Now we were talking about that implied volatility, and if we were live, we could put in these numbers over here too and have a reference point to match, to bump these up against. But okay, so we did the 30 minutes, 52.63 is our time frame. Our ATR was 30, 52.93. We're gonna go above that, so 52.95. We would have gone up to just above that, and we would have gone just below this on the PCS side, so 52.30. Notice we're kind of still in the same zone, right? We're 52.15, we were a little lower, we jumped up a bit, jumped down a bit because price is doing its thing. But you see, we already know in the last 15 minutes, we'll do the one that's in the last 15 minutes. I think, anyway, we're not worried about that. Okay, so 52.95, is that where we are? Yeah, 52.95, 52.30. Let's go to our option chain. 52.95, look at the 52.30. That will pay us $15 on the bottom, and then 52.90, another $27.30. So 30 and 15, we would be at $45 doing just those. $45, good returns. 52.90, 52.25, 52.30, I think it was. 52.90, 52.30. That's where we are. We got 30 more minutes. Okay, I'm gonna write these numbers in so we can use them now. I want to be able to see which ones worked out at the end. 52.90, 52.30. That's that next to the last set that we did. 52.95. I think I picked 90 and 52.30. We can move forward. Let's move to 45 minutes. See what our numbers would be. Okay, we're moving forward. Did we there? Yep. Let's turn our thing on. Get me to the right place. Yep. This is what our chart would look like. Right. Well, let's get us 15 minutes on the chart, because that's all we got left now is 15 minutes. We need our ATR. 15-minute ATR is 17.5. Current price 52.85. Price has definitely jumped a little bit since we've been there, huh? And 17.5. Prices kind of danced around. It was at 52.84 at 3 o'clock as well. Now it's back at 52.
Yeah. So would this be one of the ones, like I said, the last one we looked at was at 52.95 would have been the CCS, but now it's
Mhm.
we're probably 53.05. So does that give you
Mhm.
cause for pause of whoa, something's going on, or does it say still full steam ahead in your, I guess, opinion?
It depended on which time. If you are you waiting till, are you already in? Are you waiting? You also remember how Magic 8 Ball will do us, and it'll give us one number, then it's struck and it's kind of moving around. Same thing's kind of happening. Price is moving. So this is our Magic 8 Ball. It's also moving. So it depends on which time. If you're already in there, we're gonna see where do we close up, right? Where do we close? Okay, so we got 53.05, 52.65. One thing we did after the volatility got really crazy is we started waiting to those last about 15 minutes or so to really get hone in, so the less amount of time of available for SPX to act the fool. And we do know that right now we're in a market where it will do that. 53.05 and 52.65. Let's go look there. 52.65, paying $45, right? And 53.05, closer than close, is $25. That's about $70 if you're on both sides. So now let's see, where do we expire? It does its good little work here. Let's see where we expire and which one of those trades through the afternoon would have worked.
So this
1559.
this Excel sheet is meant to track
Say again.
after. So this Excel sheet is meant to track from what, 12 to close? We're
Yeah, you
supposed to do
can
that.
use it. It's set to be used if you want to during that whole period of time. Yeah. Any of those times you want to populate it, you can. That's what it was. I put all the spaces in there for you to put your numbers in if you want to. Okay, looks like it expired at, or expiring at 52.87. Okay, let's go back to our spreadsheet. 52.87. Looks like all of these numbers would have worked. 52.87 was the current price. This is 5,300 as all the calls. All these are above 52.87. And all of these are below 52.87. So from this was a 2:30 time frame. That's a 3. It don't look nothing like 1. This is 2:30. But all of the strikes we picked would have worked. One of the things we ran into in using this spreadsheet, though, is sometimes we would see $15 and 20 and 25, and we would get, maybe you'd want to get a little closer because you'd want a little more money. And if you get a little closer, then you could potentially get breached by trying to get a little closer. But utilizing the ATR, utilizing implied volatility, looking at the delta, could potentially, you're marrying things potentially together to see if they'll get you to a place where at least you got strikes you're looking at. It's giving you a place to start, giving you a tool and a resource that you can use. This spreadsheet is available inside of the chat, and it can be used. You can use it to help you back test if you want to go and back test some previous days, even in the midst of the days we're working with right now. Maybe you go into your on demand and you go and pull up on demand at 3:30, 3:15 or whatever, and you go see, just what that last 30 or 45 minutes does if you put in these numbers. and see if they hold up. See how it goes. I wanted to give, like I said, I wanted to provide us with an additional thing that we can use if we get into the last hour of the day where you don't necessarily feel as confident with Magic 8 Ball, because Magic 8 Ball, as I said, is from 3 to 350. I'll bring it over to the screen, maybe. I'm thinking I might. Here we go. Magic 8 Ball. On the verticals, I need a pencil. Y'all can see it through here, but this is the verticals in this window. This is the verticals. Oh, that's XSP. That's not even the one I want. That's XSP. I want SPX, which is that one. In that same window, though, you don't have as much green down there. You've got some windows, several places from 305 to 320, it's red. And from 335 to 345, 340 to 345, it's red. So you don't want to be necessarily jumping, hoping that you jump into the middle. And this one here, this one is only 44. These up here in the 2000s and the 3000s, and the one that's green is 44. That means it's got a low, it's barely green. This one here is 334. I know y'all probably can't see these numbers because they're little, but these up here is like 2,800. Right? That's a big difference of success rate between 44 and 2,800. That means that in this area, even the 3 o'clock one has an 85. In this area of success, it's just very low from 3 to 345. Now this number here, 350, it's 19, is that 19 or 20? That's 2,900. So this is a high success rate down here at 350, and it's like 2,300 at 355. So if you're gonna wait, you can wait to the last two kickouts. You can do that, but anything between 3 and 350, 3 and 345, that's risky. You might as well either gonna wait till the 351 comes out or use another method. Okay, I will, Mr. Mac. Yeah, I've done the 350 a few times too. Mr. Mac, I'm gonna give you my disclaimer on that bar chart, and I'm tell you how I'm reading it, which is my knowledge is quite limited. But I will put us on to how do I read this chart. So this is the gamma chart. And again, my knowledge is quite limited, so we're starting there. What I was told and I've been learning is that these big numbers are like magnets and walls. So this is green and it's above current price is this red line in the middle. This is current price, this dotted line. This big line here is going to be support. Right? The big ones are going to play support and resistance. Now, anybody who knows more about this chart is free to talk because I don't have, my knowledge is like this much. But these will play magnets and play support and resistance. So as price moves towards them, it will be drawn, price is drawn towards them. Now, TJ told me that when you get a lot of green and not a lot of red, the market makers get nervous and they want to balance it off. Or if it gets a lot of red and not a lot of green, the market makers want to balance it back. So when you see it off balance, the market makers are going to do things to make it more balanced. So if it's red, you expect we can kind of expect that something's going to start to happen to balance it, to balance it back off. Green, according to what TJ told me, is more buying, and red is more, green is the buy side. Gamma is always positive on the buy side. Shifts in gamma is shifting from buyers to sellers and vice versa. Gamma negative is selling. Gamma positive is buying. You want to watch for spiked IVs. And you also want to see, it's not just, we don't just want to look at it as one thing, but when we're looking at this gamma chart, I'm going to bring it to the screen here. When we're looking at the gamma chart, we want to be looking at it like in a flow, because you're looking at like the changes in gamma as well as, you know, at the real time, but you're also looking at the changes in it. So I'm going to go back to an earlier part of today so we can see what does it look like as the day is progressing. Okay, you can see that the day, you know, changes along the way. I need to make this a little bit bigger so that way y'all can see what's happening. And again, my knowledge is quite limited. I know I keep saying that, but that's because I want to speak intelligently about what I know, but there's a lot about it I don't know. All right. Okay, this is how the day started. This is today. This is how the day started. Looking, you know, big here down at the 52.90, 54.50. Nothing in the middle. Starts to fill in. Getting a little more green. Which direction we're going? Looks like we're going up. The green is picking up speed. Same thing here. Gives you something. The green got the two big lines now. 54. What's that? 54.50. 54. Well, 45 and 50 are the big, you know, big ones. They're going to try to be magnets and pull price up towards that. And we saw that happen. Price pulled up to the 54.50 area, which we knew to be resistance from yesterday. So when it got around there, we basically, I think might have been Wade who mentioned that it was resistance around 11 something. So I know I was pausing to see what it did there. Still got a lot of green up here though. Right? Still got a lot of green. Red is, you know, price is kind of dropping back down. So we're watching this as price is still climbing though, because now it's into price is now into those big spots. This is still 54.50. Price has come into these areas now. It bounced off of it and comes down. Price is going back down some, going back up into those same zones again, because this dotted red line is where price is. Price is going back up into the zone again. Let's see if we can do anything. It's going in. The red is starting to pick up a little bit. Only a little bit, but price is still climbing. Now you got more green over here too. Picking up. This is 1140 now. Now we got another big green that pops up. What are you doing? This new green over here is 5500 is what this big green is that's popping up over here. Now this could be somebody who's got calls, order for a bunch of calls could have popped in and say, oh, somebody believes we're going to 5500, so they put an order of 5500 calls in. That's the one that's standing out. Is that where we're going? We've now surpassed these two big bars here in the middle. Up, we're climbing. Where we going? Some other big bars in the middle. Again, we're looking at the story of the gamma, I guess. Now it kind of stops and stalls in the middle. It's kind of hanging out at the same spot because these big bars, again, will play support and resistance. In this case, they're playing resistance. It hovers in here. This is 110. It's kind of hanging out in this same area, drops back, runs back up there again. Let's see if we can get it again. It's hanging out. Not doing a whole lot. Oh, I can push a little bit more. I can pushing. The red is disappearing. Price is still kind of sitting in the same spot, dancing around, pushing some more up. And this 50, let's see what this is. This is the 5,500 that was there, was way over here now. We've gotten closer to it and it's gotten bigger. More people are seeing that, okay, we just might make it to 5,500, and more orders have come in to that 5,500. So now it's definitely the magnet. This is 250 now. 250. We're almost at 3 o'clock, almost the power hour. Push, baby, push. But we got a little wall. Notice back here, the 5,500 was the biggest thing there at 3 o'clock though. But then at 3:05, these other ones start to get bigger because now we don't have as much time. So the orders are coming in for people who want to just give me a little bit. So now the 5,500 isn't the biggest anymore. These other ones, that is 5,480. 5,475, these are equal to the 5,500, which is why we got to this area and stalled out, because you got orders that are here. People gonna get their little money and go on about their way, right? Price can't get through this wall, playing resistance. We're at 330 now. 330. Still a lot of green, no red. I kept thinking it was gonna fall back, but it really didn't. Stay right up in here in the middle. Feeling the 5,500 is still the big one now. Prices move, but these other big ones. Now we're at 355, and the current price is at where's current price? Oh, 5,487. 5,487 is here, and we're right in the middle of those two walls. And then right at 4 o'clock, game over. Wah, wah, wah. Stayed right there at that 87 area and died. So I need to start watching this. I'm just walking myself through the store. I need to watch this more often at between 3 and 4 o'clock.
It seemed like it goes just like you can pair that with the chart and compare that again with the delta to really have a better assurance that your idea is right, that you're picking your strikes. It may be profitable. But
Yeah, and
okay,
even
thank
like
you.
here, I'm thinking, like, even if you're looking here and you're thinking, if I want to pick a strike underneath here, what's going to give me safety? Well, this here is 5,460. So you're like, well, if I pick something underneath, there is at least a wall right here at 5,460. So if I pick something at 5,460 or below, I got a good chance if the price does drop, it's going to drop it to here and give me a safety net. You know, I do have a net here that's going to help me. That's
Yeah.
that's 335.
Yep. Okay.
Mm-hmm.
Got it. Thank
I'm
you.
not sure how helpful that was, Mr. Mack.
No, that's fine. It's just a visual. Again, to me, I try to stay at the 30, that 10 delta. And I think once again, that plus pairing that together just gives a better, better assurance that, hey, maybe I'm good on my strikes and I just need to hold on and wait. Okay. Thank you.
I was
You're
thinking the
welcome.
same thing that you and Mr. Max said. If I was looking at that chart and had been looking at it over the time period, whatever time all day, and saw that and looked at the story the way you just described it, I would have felt comfortable, like you said, with that 5,260.
Yeah, exactly. So all this data is available inside of Magic 8 Ball. It comes, it's called the Gamma Flow. There's this one, that's the Gamma Flow, 0 DTE Gamma Flow. And there's also the other one, if you're in the other group, Selena populates with this Gex bot. Gex bot looks like this. It's the same information, it's just laying on the side. I like the other one better because I just like the way it's laid out. To me, I have to zoom in and see what these numbers are. It's just so much easier to read the other one at a glance. But they're providing very similar information. Just one, you know, it's just the layout of it is different for one versus the other. This one does provide though, these dots tell you where it was and where it is. So this gives you kind of historical data where that other one doesn't. This one, these dots say, well, it was out here and now it's in here. Or it was in here and now it's out here. If there was, you know, if there's dots in here, it'll tell you where it was here, then it grew and it grew and it grew. So this kind of gives you more historical data, where the other one, you need to be able to see the progression. This one, you can look at one chart and see the progression at one time. So they both are quite useful, that can be used. But this is, you know, this is available. This is available inside of Magic 8 Ball amongst all the other things, which I don't do all this other stuff because it's a lot of stuff. But you know, there's some journal areas. There's the gamma stuff, which I find very helpful, which is why I populate sometimes those charts. And then you have the suggestions, the trade predictions. It says you have those too. Okay.
Miss Alyssa, in that right there in the Discord, you remember yesterday in the 210 journal, you mentioned to someone about a big candle at 54.30. And he was like, no, you meant this. You were like, no, I meant
No.
54.30.
Yeah.
What did you see? What does that mean anything to us?
I don't know. I'm trying to remember, what was it?
It was the 210 journal.
Yeah,
Mhm, right
210
there.
journal. And
It was yesterday. Oh,
I do remember that conversation.
mhm.
Was it
You were saying about
54:30,
a
I see?
big, yeah, you talked about the candle. You said, let me see, I got it pulled up here on another page. I see the strike suggested, but I also see the big candle at 54.50. So this was yesterday at the 1:20 my time. I'm on Central.
Mm-hmm.
Do you see that comment? And I was like, what does she
Yeah.
mean? I didn't want to say nothing. I was
I
gonna
was
ask you in
looking at
class.
that gamma chart, and I was looking at
Okay.
I was looking at that gamma chart yesterday, and I saw the big, like I was just showing y'all. I saw there was one of those real big ones at the, is this it here? No, that was after it. But I saw one of these big candles here. I saw one of those big wicks at that. It was beyond where we were. And I was like, even though I see we're probably gonna stop here, I see there's money also beyond, there was money beyond where we were.
Okay. Okay.
That's what I was talking about.
Okay. Yeah, because I stalk you in this. I follow you too. And I'm like, I said, tell him, coach. Mhm.
Oh, goodness. Okay. I'm trying to think of where it was. Anybody else got anything else? I think that was, where did I say?
I do have one final question.
Yep.
Regarding power hour in practical use, since let's say you're using the implied volatility, right? Since it moves so fast, are you using like 3 or 4 different screens to keep? Because I keep envisioning, like, you know, on the TV shows where they have all these screens, since it's moving so fast, if you're going to use that, it's not really practical to try to use like a phone or a tablet. You probably need multiple screens, correct?
Yeah, I mean, you definitely want to have your chart and have your option chain, and you want to be able, you know, unless you really quick with the phone, it's probably not the best. That was the question. The phone is not, the phone by itself is not going to be the best, because if you're trying to put some numbers inside of your chart, unless you have this written, which you very could, but there's formulas in here. But you're gonna want to be able to see your chart. You're gonna want to be able to see your option chain, because when I'm live, for me now, I can if you're in a live on Thinkorswim, and I don't think you have Thinkorswim, but if you're on Thinkorswim, you can see the chart and I can see the option chain all on one screen. So you probably want that, and I want to be able to see. I want to still be able to see either I need to be able to see the Magic 8 Ball, or I want to be able to see something, that gamma chart, I kind of want to be able to see something in the real time. So honestly, if you're gonna get to, that's why I said it's hard on the nervous system, because you're looking at so many things in short time, and the price is still jumping. So I mean, it's the price at from 3:45 to 4 o'clock, the price is really moving, and your heart's beating fast, and it's a lot happening. Y'all know, anybody who's done it from 3:45 to 4 o'clock, you're like, and then 4 o'clock comes and you're like, I just need a break.
Yeah, I agree. I've sat and just watched like, a watch list just move in those last 15, 20 minutes. And it's
Yeah,
quite
I just need a
exhilarating.
break.
Say
Yeah.
that.
Sometimes what I'll do, honestly, is if I decide I'm picking something in Power Hour, I literally will pick it and then walk away from the computer, because the minutes, before the minutes are going super fast. As soon as you put a trade on, the minutes slow down. You're like, now
Exactly.
it's like the time is like inching along, and you're like, can you just expire already?
Right, especially when you're on a losing week. So I totally get it. That's why I asked that question. So no, that was perfect. Thank you so
Which is
much.
another thing, reason why I say is, you're looking at your spreadsheet and you're picking the strikes, and you're saying, 15 or $20 may not be a lot, but if you're further away, if you're at 53.05 and the price is at 52.87, that's 40 points away. You're gonna feel a lot safer 40 points away when
Mhm.
SPX is moving wild than you are right on top of it, because we've been there where we were at
Exactly.
53.85 and it ended at 53.87. That's a lot, because one pop and it's through your strike, and you're like, no.
Right. Thank you. Thank
Mm.
you very much. This was good.
Absolutely. Absolutely. Somebody probably was commenting on what I was saying about how your heart beating fast. Julie said, I've done the 350 twice this week and both were fine. Yeah, that was the early one. I have 2 screens and want to add a third and don't have room to add it on my desk. I have a thing, and I may have to I've sent a picture. I have a device I bought. It sits behind my computer, and it has 2 screens. I have a laptop. So when I'm not at home, it sits behind my laptop, and it's got 2 screens out on the sides. So I can have something in the middle on the main laptop screen. I can have a chart over here to the right, and I can have something else over here. So I'm literally looking at 3 screens in my laptop. I'll make sure to put the link out so that when I'm not at home, when I'm in my office at school, I can look at 3 screens. And then I also have my work computer, which I may or may not put like a trading view chart or something up there. Most times I'm focused on my laptop and I need the room over here. So my work computer sits over here. But I've used all 3 of those screens. If I'm trading in the last few minutes, I'm literally at all those screens checking out to see what's going on. When I'm at home, I have a big screen here so I can put more than one thing on, like y'all are looking at now. I can put more than one thing up there. But you need to see, I want to see the magic 8 ball maybe. I want to see the chart. I want to see the option chain. I got my phone probably holding on to that. Just a lot can be happening in those last. So this is why I try to not be, if I can help it, I try not to be getting into something that late, because I know that it takes a toll on you. Takes a toll on you. All righty. It's a little bit after 9. Anybody else got anything else they want us to add? They want to add? Melissa said, I bought one. Everyone at work wants it now. Yeah, mine wasn't too pricey. I think I might have paid 200. It wasn't too bad. I'll find the link and put it in here. All right. Okay, everybody. So this was good. We're gonna be on again in the morning. I'll be on live in the morning. My personal trainer, he and I did not get together on Wednesday because I did not leave my computer until it was too late. So he sent me a message and was like, "We're meeting tomorrow, right?" I was like, yeah, we're meeting tomorrow. So I'm meeting him at 1 o'clock tomorrow. So I will not be able to stay on the computer a long time tomorrow, okay? But I will be on at 8:45, and I'm gonna try see if we can do our live call again tomorrow. Fridays are bananas, and now Our Microsoft and McDonald's, I closed my Microsoft, but our McDonald's and IWM, I really need both of those to decide they ready to come on out the sky. Microsoft didn't do nothing for all this time. Now all of a sudden it decides it wants to run.
Now
So
you say that. Yeah.
this is why, though, I will say that I will say, yeah, when I put the trade out, y'all remember when I put the trade out for McDonald's and for Microsoft, PCS close out, Microsoft just closed, trades update. Did I want to put there? Nope. When I put out weekly trades, I alerted. Okay. When I put these trades out, I also put in there with them the stuff in here. I put in here the profit order and the stop loss. And the reason I give all that information is so when it hits your stop loss, if you're looking at it and you're like, okay, McDonald's has gone past my $1 stop loss, you are completely empowered to close these trades with these numbers. That's why we provide them. When it hits the profit, we'll have no problem closing when it hits the profit. Well, I know for me, I have more problem closing when it hits the stop loss, and I'm not alone. I know I'm not. But I provide these numbers so that way we have them. So when a trade hits your stop or hits your profit, you can close it out, right? You'll know these are the limits that we're putting in place to close out these trades. So when it passes or it gets there or passes it, you know that we all seek to utilize good risk management. All right. That's why when I put the trade out, I put these numbers with it. So that way we all have the numbers. Nobody has to say, I didn't know when we were closing it. Everything you had, everything you needed is here in this same post. All right. I want to make sure that
Yeah, no, you're right. I didn't do both sides. I only did one side.
Yeah. And I think that was wise, you know, and what each of them was only once. I think one of these was, I think Microsoft might have been a call credit spread. And if to have only done that one side would have been breached, at least the put credit spread brought us a little bit of money because it ran up through the call credit spread side. And McDonald's, I think, is pulling back a little bit now. We may be able to get out of this one tomorrow with a little bit of profit. We closed one side of it already. IWM is the other one, and IWM is just, it decided it was ready to go with everything else finally, decided it was ready to come to the party. So, so now we need to see if it comes down tomorrow. No, it's not there. Okay. But that's why when I put those trades out, I'm not even sharing my screen, am I? Thought I was sharing my screen. When I put those trades out, I'm also putting out the information you need to close it at the right time. All right. I want to make sure that I give you all the stuff you need. Right. Everybody. Yes. I give us all the stuff we need to be informed traders. Okay. No comments. All righty. Weekly trades was that? Did we do the IWM? All right, everybody. I think we're past a couple of these, but there they are. Microsoft, McDonald's. Did I move the McDonald's down or just the Microsoft forward? There we are. They're at the bottom again. All right, all. We will see you all in the morning, 8:45-ish. We'll be on YouTube. All right. When this is ready, I will make sure to populate it into the group.
Thank you. Good night.
All right. Good night. See y'all later.
Thank you. Bye-bye.
Thank you. Good night.
Good night.
Good
Thanks.
night. Bye-bye, everyone. Bye-bye.